Welcome to Money Matters TV. I'm Audrey Greenberg, founder of the Center for Breakthrough Medicines and Discovery Labs. My co-host today is Mike Dever, founder of Brandywine Asset Management. Hey, Mike.
Hello, Audrey.
How's it going? I'm excited about our guest today, Dana Hammill. She's co-founder and COO of Descartes Therapeutics.
Right, and hopefully you have a lot more knowledge in that area than I do, so you can ask the good questions.
Okay, sounds good. I'm sure you'll have some zingers yourself.
Yeah.
So a couple, questions for you. The market is so interesting right now, and there's so many opportunities for investment. I'm just curious, can you level set and just give us an understanding of the difference really between a mutual fund and an ETF?
Sure. So they're both regulated entities. They're regulated by the SEC. They have to file a registration statement with the SEC so that they have some protection, some investor protections on the regulatory side. It doesn't mean that they can't lose money. A mutual fund, they've been around for 100 years, and they're a structure that pools investors' money to make investments into stocks primarily. And when the investors go in and out of it, they're actually buying shares from the mutual fund itself. And they can do that once a day on the close each day. An ETF can make similar type investments as a mutual fund, but it trades like a stock. So throughout the day, there's a price for the ETF, and that stands for exchange traded fund. And because it's traded on a exchange like a stock is, but it's a fund, and the pricing on it is managed by what we call authorized participants that buy and sell the actual shares of the ETF. So when you go in there and buy it, you're buying from somebody else. But if there's a lot of pressure to buy instead of on the sell side, those authorized participants have to go in there and kind of help make a market in that roughly. So the actual value of the fund that you're paying may differ from what the underlying assets are worth. Whereas in a mutual fund, you pay exactly what the underlying assets are worth.
And is the fee structure very different between the two?
Not necessarily, although the ETFs definitely have a reputation of being lower fee. And one of the reasons for that is because some of the earliest ETFs were just index funds. So they bought the 500 stocks in the S&P 500. They held those. They didn't trade them. They just managed that to be in line with what the S&P 500 constituent relationships were of all those stocks. So they would come in with really low fees, whereas mutual funds 20 years ago, when ETFs really started taking off, they would have fees that might be a couple percent annually, or the ETFs came in at maybe 0.5% annually. So they definitely got the reputation as being lower fee, but now there's such a mix. There's over 7,000 each mutual funds and ETFs.
Yeah.
And there's such a diversity of types of trading them. There's a big diversity of fees too. There's some ETFs that are as expensive as mutual funds, and mutual funds that are as cheap as an ETF.
And how does a separately managed account play into all this?
So a separately managed account is something that came out 20 or so years ago, 30 years ago, started gaining popularity. And it's for investors that have a little more money. Generally, it's 100,000, maybe even more than that required. But it can manage your account in a maybe more tax advantageous way. So instead of putting 100,000 in a mutual fund, you put it in a managed account, and the investment firm will, and sometimes it's the exact same investment firm that's managing the mutual fund, can manage that for you, but they can sell stocks to help harvest some tax losses, for example, to offset some of the gains in it for tax purposes at year end. And they can also skew it. It doesn't have to be exactly what a mutual fund's doing. It could be more customized for what you're looking for in your own account.
Yeah. So is one better than another? How does someone know what to do?
Well, it really gets down to, it's not so much the investment vehicle that matters, whether it's an ETF or a separately managed account or a mutual fund. It just gets down to what they're doing. And so I've had people say before, oh, I heard I should get into a mutual fund. Well, that's just an entity. That's it's like I should get into a school, or a college. What college? They're all different. And so it really gets down to what you're trying to own in your portfolio. And if it's, for example, the simplest and largest mutual fund out there right now is the SPY, and that just owns the S&P 500, and there's very little turnover, meaning it doesn't trade very often. It just matches up whatever the constituents are of the S&P 500, and you'll pay basis points, less than 1/10 of 1% per year to own that fund.
Hmm.
So if you want to have just a broad fund that owns the broad market, that's great. You can own something like that, or VOO that Vanguard has that's similar. If you want to get into something that's tech focused or more speculative type mutual fund, they're out there. They're again, there's over 7,000. So it really depends on what fund you're looking at. Sometimes you'll find the management in that's managing a mutual fund. Other times you'll find something, but they're a management company or whatever, but they're managing an ETF.
Hmm.
So
Hmm.
which you pick, it's sort of more relevant of what the underlying asset manager is doing. That's what you're really picking. And then whether they choose to set that up in a mutual fund or an ETF is just a separate decision. A
Yeah.
managed account, again, is something that's a little more specialized for somewhat larger investors.
And some people think we're in a bubble right now. How do you hedge against that? Do you put money in bonds? How do you manage your portfolio if you think the stock market might be going down?
Right. So I hear a lot of people say, I have money in stocks. I know it's overvalued, but I have it in there because there's nothing else to do. There's no other place to put the money. And you hear that a lot. And there's always cash. You can always move it out and put it into cash. But one of the other things that you've been hearing about, maybe some people have been hearing about lately more, is these I bonds, and they're inflation protected bonds that the US government issues. So it's a US government bond backed by the full faith and credit of the US government, and its rate of return is adjusted to inflation, and because of the inflation, and it's every 6 months, and so we just had an inflation adjustment to that in November
Mm,
for the I bonds, and they're yielding around 7% now.
wow.
So there is an alternative right now, I would say, to having money in stocks. If you think stocks are overvalued, you don't just have to put it in cash or in a 10-year treasury yielding 1.5%. You can actually put that now into an I bond. And for the next 6 months, it'll be locked in at that 7% rate. And then evaluate when it's reset whether you want to stay in it or not. So there are some options, alternatives instead of just
Yeah.
owning stocks.
And how does tax play into it? Everybody's talking about, oh, the new tax code and what's happening in 2021 and our capital gains rates going up. How do you plan for that? Is there anything someone can do or what should we be thinking about?
Right. So I don't see capital gains going up, um, because they had that, they threw that in some of these proposals, they have going through right now, and it didn't make the cut. One interesting story, though, recently, you'll see the CEO of Microsoft sold out half his shares of Microsoft this past week. And
Mm,
he did that because California is enacting a capital gains tax of 7%.
mm,
So right now, he could sell those without the capital gains tax at the state level. And since he's selling a third of $1 billion worth of shares, he's saving $20 million in taxes by selling it today instead of after the new law goes into effect. But it's not something, I don't think we're going to be seeing. It doesn't look like, at least right now, any changes in the near future on capital gains taxation. Um, I wouldn't let capital gains sway your investment decisions substantially. A lot of people are worried about selling because they don't want to take the tax gain. At some point, you're going to take the hit. If you really think it's not a good time for you to be in stocks, or your portfolio's gotten way out of whack, which a lot of people's have, as stocks have doubled and doubled again in price over the last few years, maybe you need to take some of that off the table. Don't let the paying taxes stop you from doing that.
yeah.
Rebalance your portfolio.
Yeah, that's a good point. I do think we have some questions from the audience. So we did get a question from Kelly Bolton in Philadelphia. She asks, are there any safe investments in cryptocurrency? And if so, can you name some?
The short answer is no. Cryptocurrency is so volatile across the board. It's not just the currencies themselves, but the blockchain companies and the companies that are the exchanges that you can trade cryptocurrencies on. They're all going to continue to be volatile for quite a while. They're It's difficult to put a valuation on it. I heard somebody asking or saying I'm having trouble figuring out a fundamental way to value Bitcoin. Well, that's because there really isn't a fundamental way to value Bitcoin. You can look at it and see money flows in and out of it and try to value it that way, but they're all very risky. And things like EFTs that have come out now that are also being sold through using cryptocurrencies and using blockchain technology. Where people are buying, paying $1,000 to get the original of a dunk shot in a basketball game. Those are all highly speculative. And I wouldn't say there's anything safe in crypto world.
Okay. So if there's anyone else out there who wants to submit a question for some of our future shows, here is how you send questions to Money Matters TV.
You can have your questions answered on Money Matters. Please go to our website, money-matterstv.com. On our homepage, click on the banner on the right that says, Send us your questions. While you're on our website, you can find information about our host and guests, as well as show notes and links about this show and past shows. Money Matters is also available as a podcast on iTunes and Stitcher, so you can listen to Money Matters while you're on the go. That website address, again, is money, MONEY, -matters, MATTERS, TV.com.
So today we have a special guest. Her name is Dana Hammill. Let's give her a warm welcome. Thanks for joining us, Dana. Dana is the co-founder and COO of Descartes Therapeutics. Dana, can you tell us a little bit about your company and your background and what's happening in cell and gene therapy right now?
Yeah, so our company, Descartes, actually is an acronym for Drug-Enhanced CAR T-cell therapy. And so what we're doing is we're combining small molecule treatments for cancer with CAR T therapies to be more powerful against tumor-resistant microenvironments, solid tumors, etc. We've done a lot of great work in the field and have made huge advances, but there's still a lot more work that needs to be done. So we're sort of doubling up in our arsenal, and we're continuing to try to tackle cancer.
Interesting. What led you to this field? You have such an interesting background. I'd love for our viewers to learn about you and how you got into this.
So, excuse me. Interestingly, I was a biochemistry major, and I was working in a bar as a starving student. And there was a professor there from Rutgers University, and he was telling me how biotechnology is the hot new field to get into. So I ended up taking the leap and changed my major and went up to Rutgers. And then, my real true love at the time was to be a forensic scientist. And so I was planning to work in the DNA lab, and I was going to fight crime and do all these great things. And there was a hiring freeze, and I graduated and really couldn't find work. So I ended up pulling out the newspaper and looking into help wanted ads. And I'm probably seriously dating myself by saying that. But there was actually a position that was open at the Institute for Human Gene Therapy at University of Pennsylvania. And I thought that sounded really cool. So I decided to apply. And I ended up working in their GMP facility, which is a facility used for making, drugs that are going to go into humans. And so in this case, we were making viral vectors for human clinical trials. And so much to my dismay, I show up to work and I'm all dressed up, and I find out that I need to be in full Tyvek suits every day. So I found myself, manufacturing adenoviral vectors for gene therapy clinical trials, not just at University of Pennsylvania, but at other institutes across the world.
Well, that keeps it, makes it easy, the decision in the morning, what you're going to put on.
Exactly.
Yeah, my wife went to Catholic school. She said the same thing. She liked it. She had a uniform.
Yeah.
Nothing to think about,
I was a Catholic
right?
school girl too, so yeah.
Okay.
It helps a lot to not have to think about that anymore.
Right. Now, I have one question about you got that job there. What were I know you had gone to school, but what was it they saw in you that made them hire you over other candidates at that time?
I think it had to do with, two things mainly. So the coursework and the lab work that I had done at Rutgers as a biotechnology major was very much in line with what I would be doing in the laboratory at the Institute for Human Gene Therapy. And the other thing is that I had interned for quite a while. So I had already had working experience in a laboratory that had me quite familiar with, practices that needed to be followed in a lab.
Okay. And then so you would go, you went into work, you put on the Tyvek suit, and what is it specifically you're doing day to day? What was your role?
So at the time, we had multiple clinical trials going on for different disease indications. But fundamentally, we were genetically engineering adenoviral vectors. And an adenovirus is really likened to a common cold virus. But what we were doing was we were inserting genes that were lacking in the patients. So maybe the patient had a mutated gene, maybe they just were not able to make a protein that was being used in the body, but we were in essence giving them back what they were missing in the hopes that we would be able to cure their disease. And we did this for all different types of indications and cancer included.
And that was in people, not in animals.
Correct. Well, actually, part of the process of being able to do a clinical trial is the FDA has a lot of requirements around this. And so you have to submit something to the FDA called an investigative new drug application. And in that application, there's a lot of data that you have to provide to the FDA to show that what you're seeking to study is actually, you think is going to be safe in humans. And so you demonstrate that with laboratory testing, and then in some cases also animal testing, depending on the indication. So we did extensive research also in animals as well. And that was part of the package that we submitted to the FDA in order to receive the okay to begin doing a clinical trial.
And what was happening in the field then? I mean, back in 98, that was really at the beginning of the current revolution that's occurring in medicine with the ability to cure some of these disease indications.
Yeah.
So what happened in 98 and what was your role in that?
So, I started there in 98, but unfortunately in 1999, we had the sudden death of a young boy who was 18 years old, but his name was Jesse Gelsinger. Many people in the field are familiar with this story. But at the time, I was actually the person who manufactured that virus. So, I made it in the laboratory. I prepared it for infusion, handed it over to the surgeon that was treating Jesse. And this was not the first time I had done that for patients, right? This was actually a piece of my work that I really loved because it enabled me to see that the small piece that I did was hopefully going to impact patients positively. And unfortunately, what happened with the case of Jesse, as many know, he had multiple system organ failure, and he died as a result of a massive immune response to the viral vector delivery. And it actually, as many also know in the field, it actually brought it to a grinding halt. And so there was a lot of talk and speculation about what was happening at University of Pennsylvania with the head of the trial, who was Dr. Jim Wilson. And having been there firsthand and having witnessed everything that happened, I can say for sure that we were all traumatized. We were all deeply, deeply saddened by the loss of that young boy. And as I know Dr. Wilson was as well. But what happens with cases like that is obviously there's a big investigation that needs to go underway. And so essentially, not to get into lots of details, as anybody on the, can search the internet to find, but the FDA had shut down the clinical trials that were going on in our institute. And then we inevitably shut down the entire institute in 2000. So although we continued to do gene therapy research, it was not in humans. So I actually stayed with Dr. Wilson, and we continued to do research and very good research. But the clinical trials were on hold for quite some time, and across the university and of course for the entire field.
You say you stayed with Jim, and so what did you do then following that?
So we became a new organization at the university, which was called the Gene Therapy Program. And so we were working, we were continuing to genetically engineer viral vectors. We were continuing to do other studies in animals. But also what was happening in our world at the time is, and I don't know if many recall this, but in 2001, President Bush put a ban on federal funding for stem cell research. We also had the Patriot Act go into effect. And so we actually started researching viral vector vaccines for biowarfare. And so I started working with the CDC and some other organizations to figure out how we could, prevent, any kind of biowarfare happening. So the field took a very big turn, but we continued to work in genetically engineering viral vectors because we saw a lot of promise in that. And there still is. And I think that's part of where the story starts to go in terms of, I eventually left Penn. I started working in venture capitalism. I started working with other startup companies and then went on to do my own consulting for a while. But I eventually ended up going back to Penn in 2011. I sometimes joke that I was doing my second tour and came to work for Dr. Carl June. And interestingly, Carl came to Penn about a year after I did. And he was this, world-renowned immunologist and was doing lots of work with HIV. But a friend of mine said, Carl's been doing some really great stuff with cellular therapies, and you might want to check it out. So I ended up going back to Penn and working with Carl. And he then, it's interesting, the cellular therapies uses a component of the viral vector, right? So the viral vector actually becomes part of the product that helps engineer the cell that goes back into the patient. And so I think it's really remarkable about the story is that in 2011 and then on to 2012, Penn ended up entering into an alliance with Novartis to commercialize CART19, which is a T cell that's been engineered to fight cancer. And we progressed that alliance, and we ended up becoming the first gene therapy approved product in the United States. And I think what's really remarkable about the journey is that, I had the unfortunate experience of seeing it crumble. And yet I also had the very fortunate experience of watching it come back again. Wow. And it all happened at Penn, which I thought was also really remarkable. And so now we get to see that there's a lot of patients out there that are receiving the benefit of CAR T therapy and their cancer is going away. And that's really moving for me as an individual and as someone who is trained to be a scientist. I've kind of moved to the business side of things at this stage of my career, but I think it's pretty phenomenal what we've been able to do with genetic engineering.
So you worked with Carl for a while then at Penn. And how long did you stay at Penn working in cellular immunotherapies, and where did that take you?
So I stayed, we commercialized CART19, and then we were sort of looking at, do we kind of go back to our grassroots clinical trials and translational and clinical medicine research? Do we continue to look for other opportunities in terms of, commercializing? And, University of Pennsylvania is an academic institution, and it does remarkable science. Penn Medicine does remarkable medicine for its patients, but we're not a commercialization engine. And so we decided to kind of go back to the lab and start working on the next thing that we can help treat cancer. We started seeing with the CART19 patients that some of them were relapsing, or some just weren't responding at all. And so, and there's still so much more to do. And so as we were adventuring down that pathway, we decided to, Carl, myself, and a couple of other investigators from Penn decided to join forces with another company and become founders of a new startup. And I decided to take the leap and lead this startup. And part of it has to do with the fact that I know I'm working with an amazing team where we all want to help patients and cure these diseases. Phenomenal scientists, and actually be able to help push this through and get this commercialized, get our technologies commercialized.
Yeah.
And so,
How far
that's the
away are
main
you
thing.
from commercialization? I mean, what's the process?
We still have several years to go, but we are hopeful to enter clinical trials in 2022. And as well as, we've been developing new technologies and new IP through the past year. So, hopefully next year we'll be able to see the fruit of our efforts.
Yeah, it's exciting because I don't know if the viewers out there know, I know, Dana, you're obviously familiar, but 90% of the cancer patients have solid tumor. And although we've proven that CAR T cell therapy can work in blood cancer and liquid tumor, 90% of the cancers, it hasn't been proven yet. And one thing that Dana's working on has been the solid tumor. And I think it's great what you guys are doing for all the patients suffering out there. And hopefully we'll have some commercial success for this.
Yeah, me too.
And so what do you think is next on your journey here, Dana, for your company in terms of just the path to commercialization? What are you guys focused on, and what do you see as success in the near term?
Well, I think that, so, the company is based on drug-enhanced CAR Ts. And so we're in the process of evaluating data from our parent company that is in clinical trials with oral compounds. And then we're also getting ready to launch another clinical trial, not CAR T, but a different cellular therapy in combination with the drug enhancement. Then we'll move into CAR Ts. But right now we're looking at the data from just the oral alone, and it looks pretty fantastic. So we will continue to progress clinical trials into solid tumors, with the hope that we'll be able to commercialize, in the upcoming few years.
That's so exciting. We're really at the revolution for medicine right now, and at the tipping point for being able to cure some of these diseases and cancers. And we're so thrilled to have you on our show. Thank you so much for participating and sharing your wisdom with us. Our next guest, by the way, on Money Matters TV is Dr. James Chan. He's a PhD from Asia Marketing and Management. So stay tuned to hear some words of wisdom from him. Thank you, Dana, and thank you, Mike, and thank you all out there for watching Money Matters TV, where your money matters. See you next time.